I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. Welcome back to the show, John.
Hey, Jim.
The U.S. Trade wars, accusations of currency manipulation. What's the status there, and is China going to be hurt as bad as the president said it's going to be by tariffs?
Well, the status in general of this is that it's a mess, and it's hard to say who's going to be hurt worse because, we're all interconnected. So this is a circular thing that we've got going. China is definitely suffering. Several of its banks have needed to be bailed out just lately, and its factory production is slowing, in a country that's got a lot of people who need jobs. And it's got civil unrest in one of its flashiest cities, Hong Kong, that looks like it's leading to maybe armed intervention or some crazy thing like that. So China's suffering. And the U.S., we're seeing weaker numbers, and our farm sector is just getting smacked. Try to sell a combine to a farmer right now if you're John Deere or something like that, and good luck to you. So we're suffering, and, Europe is a collateral victim of this stuff. Germany's numbers are really starting to trail off, and that's because they're an export powerhouse. And in a world where exports and imports, in trade, in other words, are no longer growing like they used to, it becomes impossible for Germany to put up those phenomenal numbers that it's gotten used to, and that's affecting the health of the European economy. So it goes on and on. And now China is doing something interesting because they don't have as many flat-out tariff weapons as the U.S. does, because we run a trade deficit with them, which means they've got more at stake. But they can cut the value of their currency. So they've gone the currency war route just lately, just in the last week or so, where they set the price of the yuan at a lower level than in the recent past, as a way of showing us what they can do if they need to. In other words, they can lower the value of their currency to make their stuff super cheap and offset the tariffs that we're applying on those things. And yes, that's how it goes. Trade wars turn into currency wars. Currency wars turn into destabilizing bouts of inflation, which cause currency crises, and on and on. So we're in the early stages of something like that, and hopefully it doesn't get any further than this. But we're taking steps around the world in that direction, and the later stages of that process are extremely chaotic, and which is why you're seeing money flow into safe haven assets right now. People are worried because they know what comes after a Chinese devaluation, and they know what might come after, for instance, a rate cut in the European Union when the ECB meets next, because Donald Trump is threatening to lower the value of the dollar if Asia and Europe start lowering the value of their various currencies. And there we are, we're in a currency war. So money's flowing into real stuff, notably gold and silver. You guys in Canada now have a record gold price, right? It should be noted that in the past, when gold has hit record levels, it's usually part of a bubble process, where there's sort of a mania going on for precious metals. And, nothing could be further from the truth right now. The gold is just drifting upwards in a lot of different currencies instead of rocketing up. And it's starting to move up now in the U.S. finally. So the parabolic part of this process hasn't happened yet. or at least in most countries it hasn't happened yet, which means there's a lot more action to come in precious metals if these things aren't resolved right away. You know, the trade thing and the civil unrest thing and the Middle Eastern war and all the other stuff that we're terrified of right now and is, causing people a lot of sleepless nights in the financial markets. If those things aren't resolved, we'll see more capital flow into safe haven assets. And, you know, we might see Bitcoin go parabolic, for instance, or oil go way up. And, you know, certainly precious metals ought to be part of that. So, you know, long story short, we're in a chaotic time that is not nearly as chaotic as it could easily get if a lot of these trends continue.
Do you think anyone will take credit or blame if things just all of a sudden drop, the bottom drops out of everything?
Well, people don't take blame, but they have blame imposed on them when that happens. And see, that's a big part of the motivation around the world right now. Like for the guy who's running the Federal Reserve, Jerome Powell here in the U.S., does not want to be the Fed chairman who presides over some kind of a big crisis, right? So he's under a lot of pressure to both raise interest rates and cut interest rates, depending on who's talking to him at any given time. And that's the box that the Fed was always painting itself into. And now it's explicitly in there where if it cuts interest rates, it contributes to the currency war scenario. In other words, it can be interpreted as us trying to lower interest rates to make the dollar weaker to compete with a weaker yuan and a weaker euro. Thus leading those other countries to cut the value of their currencies even further, et cetera. If the Fed were to raise rates or just not raise rates from here on out, not cut rates from here on out, the global economy might tip into a brutal equities bear market. And then the Fed would get blamed for that too. You know, so whatever they do, they're on the verge of being this generation's Herbert Hoover. In other words, the guy who presided over and therefore caused a huge economic crisis. And there's no solution for them. You know, the central banks are pretty close to the end of their current ammunition, which is easy money and low interest rates, weaker currency. You can only do that for beyond a certain point. You can't do it much. You know, you can't lower interest rates too far into negative territory if you're Europe or Japan. And it's not clear you can get below negative interest rates if you're the U.S. or China. And we're getting there. You know, we're hitting that point where what economists call the effective lower bound of interest rates is reached. And at that point, it's not clear what we do, because we can't tighten to raise interest rates, because that'll cause a deflationary crash that'll rival the 1930s. But if we keep pushing rates down, then we get all kinds of weird effects and unintended consequences that we, first of all, can't predict individually, and we certainly can't predict in combination. In other words, what they'll do when several unintended consequences of negative interest rates hit at the same time. We just can't know that. And that terrifies the people in charge. But they don't have any other choices. This is all they have to do now, because they have no other tools really to work with. So very interesting times coming. Very, very interesting times for gold bugs coming. And I think that the junior miners are looking really interesting in the intermediate term. There might be a big correction in gold and silver in a lot of different places just because they've had such nice runs for a while. So it's easy to see a 20% or so drop in their prices and a 30 or 40% drop in a lot of the mining stocks prices in the short run. But it's also easy to see massive increases in all of those prices over the next few years. So it just depends on what kind of an investor you are. If you're a trader, you've got some volatility ahead of you to exploit. And if you're a buy and hold investor, ride it out. It's going to be fine in the end, and just, accept that there might be some pain along the way in return for all the pleasure of 10-bagger junior mining stocks and $50, $100 silver and $2,000 or $3,000 gold, because all of those things appear to be coming.
We'll have more with John Rubino right after this.
Cypress Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're chatting with John Rubino. John, depending on what currency you're in or buying gold with, does that make a big difference in how much it's gone up in value?
Oh, yeah. Gold is at record levels in a lot of different countries right now, because the currencies of those countries have been down relative to the U.S. dollar. Meanwhile, in the U.S., we're up some lately, but we're a long way from a record. So, I understand you guys in Canada have record high gold prices. Congratulations. That must be exciting. And, I'm looking forward to something like that happening in the U.S. But this is a good example of how all fiat currencies are going down in value, but they're going down at differing rates. So, for instance, if you're any Latin American gold investor, you're doing great in your local currency right now because your gold is going up dramatically versus the local currency. In most other countries, like the UK, for instance, gold is at record levels. So anybody who has gold is up no matter when they bought it. It doesn't matter when in the last 100 years they bought their gold, they are up. And it's possible that they're up dramatically if they bought near the lows recently. Same thing with you guys in Canada. And in the U.S., because the dollar has been kind of a safe haven currency for such a long time, it's been relatively strong, and gold has not gone up as much here as it has in a lot of other places. But as I said, it's starting to run. So when this thing gets going, there's no reason to think that gold is going to go down versus any currency. It'll just go up at varying rates against varying currencies. But the trajectory over the intermediate and long term is definitely up. Short term corrections are possible anytime, but in the long term, with all the fundamental things that are going on, massive deficits, extremely easy money from most central banks, with the other central banks having to jump on board now, notably the U.S. Fed, and tons of geopolitical turmoil. Hong Kong, the Middle East, Argentina just saw the quote-unquote business-friendly president lose a primary election, and the Argentine peso tanked just lately. So you got stuff like that. And the Jeffrey Epstein thing in the U.S., which could possibly be an earthquake in the U.S. political system or in the global political system, because we don't know what's in that guy's secret diaries, and we don't know whether we're going to find out. But if we do, and there's some big names, and it affects the political future, since we have a presidential election now underway, that could be a very big deal too. All of that stuff is out there, and all of it points towards higher precious metals prices. We just don't know the rate, at least in the short run, that gold and silver will be rising at, and whether they'll be correcting in the short run. But longer term, they're going to go up, it looks like, just because we're screwing up our finances on such an epic scale that it's almost inconceivable that sound money like gold and silver and other forms of real assets like oil wells and farmland and solar farms, things like that, don't go up relative to most local currencies.
We'll have more with John Rubino right after the break.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with John Rubino. John, countries like Canada and the UK sold off all their gold back in the 90s. Other countries like Russia, India, and China since then have been buying all the gold they can been laying their hands on. Who did the better thing for their citizens?
I think it's pretty obvious that China and Russia have been very smart about their gold accumulation. And India has been accumulating a lot of silver too. And the Asian countries do this in part because they have a cultural affinity for precious metals. They have a tradition of giving gold and silver jewelry as wedding gifts, which is really the same thing as giving cash, only with a lot more stability. You know, gold and silver jewelry hold their value much better than $100 bills. So that it's kind of a monetary tradition rather than a adornment issue, what they're doing. And so over time, they accumulate huge amounts of precious metals, which is a little bit of a problem when precious metals are weak because it's taking a lot of money out of circulation because the jewelry just sits there in vaults and jewel boxes or wherever people put jewelry, and doesn't circulate. But when precious metals are going up in value, that means the net worth of all those people who have the gold and silver jewelry are up as well. And so they feel richer, they're more likely to spend, so it's a stimulative thing. Now, the Chinese and Russian governments, meanwhile, have been adding gold aggressively to their foreign exchange reserves. And it's not explicit what their policy is, but it's highly likely that it has something to do with them being frustrated about all the advantages that accrue to the U.S. because we have the world's reserve currency. And that allows us to print unlimited amounts of money, build a global military empire, and push those guys around with it. They don't like that. So they're accumulating better forms of money, in other words, gold bars, and creating potential monetary systems for themselves that could be gold-backed and therefore could be better than dollars from the point of view of the global financial system. And that way they get a little bit of the power of having a reserve currency. And we lose some of our power that we used to have with the reserve currency. So if that's their strategy, so far it's working. They've been accumulating lots of gold, and the value of that gold is going up, which means the value of their monetary reserves are going up, which means their currencies, other things being equal, are better backed and therefore more stable. So yeah, I think it's completely possible that at some point in the not too distant future, not immediately, but a ways down the road, that one or both of those countries, China or Russia, partially or completely back their currencies with gold. And in that way become monetary powers at the expense of the U.S. And even if they don't do any of that, they've been buying an appreciating asset. You know, they're making money on this trade. And if that's all that this turns out to be, it's still a smart thing for them to do. And they'll, in the end, be glad they did it, apparently.
Should places like Canada, the U.S., and UK start building up their gold reserves again?
Oh, yeah. Just on principle. You know, we should be adding to our gold reserve. And what China does, for instance, is all their gold miners don't sell gold in the open market. They sell it to the government. The government just takes the entire domestic production of gold and adds it to its monetary reserve. There's no reason why we couldn't do the same thing in the U.S. to replenish some of the gold that we've secretly sold on the open market to depress gold's price in the past, maybe. Or if we didn't actually do that, and I just made that up, to increase the amount of gold that we already have to levels that make the dollar bulletproof. You know, if you have enough gold backing of your currency, then you de facto have a strong currency, just because it becomes a name for a certain weight of gold, if you want it to. That's the way it used to work in the classical gold standard. For 200 years, the major currencies of the world were just names for weights of gold, or silver in the case of Great Britain. And they were exchangeable for gold from the government. Anytime a citizen wanted to bring in some paper money, the government would give them gold or silver according to the words on those pieces of paper. And that limited the ability of governments to just create unlimited amounts of paper. Because if they started running the printing presses flat out, people would just bring that paper back and demand gold. And then all the gold would disappear and the currency would collapse because it was no longer backed by anything tangible. That worked for 200 years. And we're going to have to go back to something similar to that at some point, because fiat currencies clearly don't work because they're missing one of the key ingredients of a successful money, which is limited supply. There is no limit on the supply of US dollars or Canadian dollars or rubles or euros or yuan. You know, the governments can just make as many as they want to. And human nature being what it is, they're making way more than they ought to because it's politically expedient in the moment to do that. When this system breaks down, therefore, we will have to go back to some other kind of a monetary system, and we'll probably want to address that issue of a government-run printing press. We won't want to have that exist anymore because we'll correctly perceive that to be one of the problems with what came before. In other words, with the system we have today. And one way you take the printing press out of the hands of the government is by basing your currency on something that governments can't create more of. And in that way, you limit the money supply. So we'll get there, and we'll get there at a much higher gold price. Jim Rickards, for instance, who's an expert who's written extensively on this subject, puts the required price of gold at $10,000 an ounce to back the U.S. dollar the way that it used to be backed during the classical gold standard. If we want even more secure backing, or if we create a huge amount of new currency in the intervening years, you know, between now and then the number has to be way higher. So 10,000 kind of becomes the floor for gold, because that's what it would take today to back the world's currency. But as we continue to create more currency, the required price of gold to go to a gold-backed currency goes up. So we could end up doing it at $15,000 or $20,000 an ounce because we aren't doing it now. You know, we'll have to wait a while. We'll have to have some crises, and then we'll do it. And at that point, it's hard to know what the price is going to be, but you know it's going to be way higher than today.
So should we all be running out and buying all the gold and silver we can lay our hands on now, or should we do monthly averaging? What's a good strategy?
You never want to go out and buy all of anything you can lay your hands on right now, because you don't know whether this price is going to be the best price. And you'll feel terrible if you put all your money into something and it has a correction right after you do it. In fact, there's kind of a law of the universe that if you run out and put your life savings into something, that thing will go down at first. And so I wish you wouldn't do that, because I don't want gold and silver to go down. But in an uncertain world, which is to say in any kind of a financial market, the best way to get into something is dollar cost averaging. You know, you just designate a certain amount of money per month to put into these things. And when those things go up, you buy less because you're using the same amount of cash. And when they go down, you're buying more. And that gives you a nice average price over time and allows you to not stress out over price corrections, because you have the positive aspect to them now that you're getting more for the money that you're putting in this month. So it makes makes it psychologically easier to be an investor in volatile assets. And then over time, you accumulate more and your price gets better and better, and you end up in pretty good shape. Now, the only thing that makes that a bad strategy is if it goes through the roof this week. and there's always the possibility that something like that will happen, but history says those moments are pretty rare. They happen, but they don't happen very often. So day in, day out, you're better off dollar cost averaging.
John, thank you so much for chatting with us.
Sure thing, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. If you have any questions for John or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.